All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and we have to talk about what is going to happen tomorrow. You have the CPI, and it is arguably the most important CPI ever. It's actually insane. The market is pricing in a lot. We have moved almost 6% leading into it, and a lot of money is on the line, and this could very well set out the rest of the quarter coming into earnings and Powell, and it could give a lot of evidence to what the Fed is going to be doing. So, Chad, I got the breakdown for you. We're going to John Madden it a little bit. I'm going to go over everything, what is expected, and I got a bunch of pretty pictures and even a secret chart, and then we're going to go over the play. But really, we have to focus on what is happening, what will be released, and honestly, there's a couple of other factors that will be embedded within the report tomorrow that can all around both make this a giant day as well as a confusing day. So I have everything for you, the plays and all of that. I'm not even going to hit you with the intro or anything because we have to go over a lot. But now let me start with this right here, right now. We are going to be live, youtube.com/thestockmarket. Put /live anytime during the market hours and you will see us. But we are going to be live before the report, and this report comes out 1 hour before the bell, all of the data. So we will be live 15 minutes. I will usually have a bunch more data that we could present. We're going to go over all the analyst comments and all of that. But if you have any questions or are confused, we are going to be there in the morning. So, Chad, let's get right into it. What is expected? I'm going to show you an order of operations in terms of what you should be following, but let's start with the basics. The CPI year over year, this is referred to as the headline number. It is expected to come in at 6.5. If you took all of the economists and averaged out what they expect, they believe it will come in at 6.5. Now, I have a little bit of new info for you. Bloomberg economists, they are already expecting this to come in at 6.3. And I've talked about this given the year over year. If you compare January 22 inflation to what we are about to get tomorrow, the January or December of 2023, inflation was already high. So I want you to keep that in mind. Or wait, this is December. So either way, it's still both high from then. But what I'm trying to tell you right here is that this number should be coming down. But this is the headline one. However, more importantly, on every metric, when you see X food, X energy, that is your core metric. And this, even Bloomberg and everybody, they are expecting this one to come in at 5.7. So that's the basics. But now we brought this up here. These are year-over-year metrics, and you're comparing it to last year. That gets a little confusing, but the big thing, the algos, the markets, the bonds, and everybody is going to be watching for, it will be the month over month, because even if these numbers drop, if month over month increases or month over month declines, that tells you a little bit about the near-term trend and where inflation is going. So believe it or not, the month over month is going to be the most important. Now, obviously, core month over month, this will be the most important. And again, just like the headline core, it's expected to be, or not the headline, the year over year. Remember, headline is including food and energy, but the 0.3, this is the normal one. Everybody is expecting that we are going to see a 0.3% increase month over month. And if this comes in any lower, that will be very, very bullish. And then the month over month, like we're saying, the economists expect 0.1. Bloomberg is expecting a drop of 0.2. So if this comes in a little lower, people will like it. But again, if this drops more than any of these numbers, these will be the bigger ones, okay? So that's where we're starting here. And one thing I want you to see about what is happening tomorrow is that you are also getting initial jobless claims and continuing claims. So don't forget how important all of the earnings are going to be. But now, this isn't the most important stuff. I just wanted to give you this quick rundown, but now let's bring it to the writing and let's bring it to the keys, and I'm going to go over this again, and we're going to get a little bit more John Madden with it, okay? But jumping here to the keys, like I told you, tomorrow tomorrow is arguably the most important CPI ever, and why I'm LOLing is because you've probably heard this a lot. Either I've said it, a lot of people have said it, and just one thing I want you to be prepared for is that no matter what happens tomorrow, don't underestimate the market to quickly be like, okay, we got earnings now, and now we got to wait for Powell, and then they start looking towards the next thing. But given the nature of everything, given where the market is at the beginning of the year, this does hold a lot of weight, all right? So I want you to keep that in mind, and now this is the order of operations, and what I mean by this is very, very simple. This is the weight of importance and really what I am going to be looking at as I interpret this live. So it's kind of what I just shared with you. I wanted you to know the estimates and what is expected to happen, but now I'm going to just go through the read, and then we are going to go a little bit deeper with this, and we have to talk about some of these secret charts and what people are looking at. So let's start with it. But actually now, since I didn't give you the intro, if you are still here, drop that thumbs up, baby. Make sure you're subscribed, okay? Make sure we see you there. Show some love, and I hope you're ready for tomorrow. But the first thing I'm looking at right when that report comes out, the month-over-month core, that is going to be the most important one. And if that drops, like I said, that will be a very bullish signal for the market. And then the headline month-over-month, aka the non-core, if that drops even below 0.2, that will be very, very bullish. But after checking that, if those are good, or hopefully we get an easy reading, or if we can't, the next thing I'm going to jump to is Core CPI. If that goes below 5.7, I will take that immediately as bullish, given most people are expecting core to be a little sticky on this report. And then headline, like I'm showed you, most people are expecting this one to be a little bit weaker. So technically it's like number 3, number 4 on the list, right? But now we got to talk about something else, and this is also in the data. It is going to be the wage data, and I think this one is going to hit on the back end after the first move. So after everybody digests this, there's going to be a 1-minute pop, maybe 5 minutes, every 15 minutes is what you want to keep in mind. But towards the middle of the day, as everybody digests it, you get more comments from everybody. This wage data might creep in here depending on what happens. So let's jump back to the chart. You see it right here. Real average hourly earnings. There's year over year. And then there's the average weekly earnings year over year. There's no estimates, but people are going to look at where it was at prior. So I showed one of these charts earlier, but now this is another chart that people are looking at, and I want you to keep this one in mind. But essentially, this is the average weekly earnings, and you can see why the prior is so important is people want to see the direction of where it goes. And remember, if the wages go down, that is what people liked at the last non-farms, which is why we are up 6%. But if that goes up, that won't be good. But now what is it overlaid with? Another big factor people are looking at, just because it recently peaked, and I'm sure you've heard a lot about eggs recently, it's food inflation. And remember, core excluding food and energy, this is one of those core measures or non-core measures. This will be key for the headline, but people are going to look at this, but what people will be comparing it to will be the wages. So when we first get to the reading, I want you to keep in mind everything with the month over month and all of that, but people will definitely be looking at average weekly and average hourly earnings, but especially the average weekly earnings. And if that number goes up, that will not be good. So keep that in mind. And now finally, one other factor, and I have way more pretty pictures I got to show you, but this one right here, like I said, jobless claims is going to be the X factor. So if people are really lost and none of these are big misses or big beats, and we don't really have, let's say everything kind of comes in line, or 3 of them are good, 2 of them are bad, and we're not too sure, just don't underestimate what these jobless claims could do, because again, Fed believes these are very important and it is part of their mission. So depending on what happens, I don't want you to ignore it. Only if it becomes a difficult read will you then start to see people, use this as a driving force. Will people bring this up throughout the day? Yes, but the real question is it going to be enough to outweigh inflation? And how does the inflation data affect the bonds? And now, are we going to get 25 or 50 basis points for the next meeting? So these are the main keys. This is the order of operations, but now we got to go a little bit deeper, baby, okay? there is a real deeper reading with everything we are going to be dealing with, and it doesn't show up. So when you go and look at all of like core this, core that, believe it or not, you have to go a little deeper to see what is going on. And this is what I want you guys to see, and we brought this up on stream. This is what is going to be expected out of the CPI. But you see this blue line, these blue bars, the dark ones, that is services excluding energy. But now let's jump back real quick so you see what I'm saying. There's going to be a deeper reading, and it's called core services excluding shelter, and this is what every member on the Fed has been driving home, and they have been saying this is what they are looking for to be confident that you are actually getting disinflationary signals. And now that the Fed has said it so much, I really believe the algos are going to be focused on this. So it's quite simple. If this number drops, that will be extremely bullish, but if this number stays up or even increases, that can turn any bull into a bear. So no matter what you get here, if there is a noticeable move in core services excluding shelter, it's not going to be good, and I think people could get spooked out a little bit. So I'm going to go to that chart on core services. That is the secret chart, but I want you to also understand before diving deeper into the core services, just look at this chart right here. If you've noticed, the core services all throughout 2022, again, this is excluding energy, not necessarily food, and that's why food will get tied into it, but you'll notice this chart hasn't peaked at all. This has been uptrending, and now go look here. These are commodities. It's peaked and came down, had a little bit of another high, but the last 3 months it's been coming down with inflation. Same thing could be said here with just overall food. You had a little peak. It never really went too high. One or two more bumps up higher, and then it came down, and then energy obviously has peaked and is coming down. So hopefully you see what I'm saying is that people are looking for this to at least peak when little by little every month it has found a way to keep going up. So in general, even if services go up, this will be a bad sign because everyone's like, yeah, inflation's coming down, but most of it was because of energy and food. Again, that's why we're looking at the core stuff. But if this keeps going up, even without the shelter, that will be a very bearish signal. So I want you to keep that one in mind. But now let's get to the good one. And I will have this early in the morning, and I want you to see it. And you could go to the Bureau of Labor Statistics, the BLS. They will have this on the website. You just got to go and find it. It's pretty easy to find. So, or you could come on stream, and we're going to have it up here. But this is what I'm talking about. Services less rent of shelter. And you'll notice this is that chart here, and it has been chilling out. It's calmed down. It stopped going up. That's why this report is so important, and that's why the Fed wants to see this, because even though inflation has dropped the last couple of months, they haven't watched this come down. And what I have it overlaid with is used cars and trucks, because if you remember that the last one, I told you this was going to be coming down because of some of the lag data, and that would help ease up the CPI. So people are looking for the same thing to happen here. It could be a little bit more delayed, and then on top of it, this one is also expected to drop a little bit more tomorrow. So hopefully that brings down even more, and that's possibly why Bloomberg is expecting some of the headline numbers to come down a little bit more than analysts are expecting on average. But quite simply, this blue line, services excluding shelter, that is going to be the main key tomorrow. If this goes up, I would borderline want to tell you that you could ignore everything else I just said. And what I mean by that is that no matter what these numbers show, if we see an increase there, unless there's like 3 or 4 things, unless the wages are really, really bullish and then services drops and then that's like the only one that stays up, I would say you could ignore that. Otherwise, I really think this blue line will be the X factor. If it could go down, that will be good. A lot of people are thinking it will still like stay sideways. If it goes up, we will have a really, really big problem. So keep all of that in mind. And then finally, just to give you a little bit of a rundown for tomorrow, the markets are expecting a 1 to 2.5% move. I do believe it could be bigger depending on what we get. And there's just so many things. Again, all of the data, looking at services, the core services excluding shelter, the jobless claims. this could be maybe a 5% move, but at the end of the day, considering we've already moved 6%, if you go up another 2.5%, you're almost doing 9% in a week and a half to start off the year. I mean, it's already a big move if you compound it. So keep that in mind, and that's what I'm saying here. We've already moved 6%. So the real thing to keep in mind now moving forward, and I don't think it's going to be about the percentage move. It's really just going to be about the trend. Right now, the real key in price action is going to be, do we break this uptrend to 4,000 or this downtrend since 2022? Do we get above 4,000 and can we hold that up? Otherwise, if we don't, people are saying we're going back to 380. You get back to 380, they're going to be calling for a new low, and then it might get a little bit crazy. So that is the rundown. Again, nobody knows what's going to happen, and even then, I got caught off guard on the non-farms, but we love these events. We're going to stay focused. We're going to be there, and at least we know what to be looking for, but at the end of the day, you never know what the market's going to run with, but it should be an exciting day, and we will be there if you need any help. So hopefully we see you there, and hopefully you like the video and subscribe by now. Oh, man. But let us get into the plays. So right off the bat, Chad, I got a couple of plays. I didn't really do much today. You'll see what I'm holding. I got a little bit of both ways, and we'll talk about it in the plays when I get there because in a weird way, I'm slightly leaning bullish, but I do have a call. I got to put, actually, it's futures and shares, and I did make option plays today. We'll go over them, but don't let me get ahead of myself. The first play is going to be bonds. IEF, TLT, /ZN, TBT. I mean, pick your poison. Again, these are all different bond ETFs. There's even SHI for the short term. I am focusing on the 10-year because, as I've always said, even through this channel, I always believe that is the most important one. And really, I think the bonds are going to be the biggest winner no matter what. And I think there could also be a lagging effect. But overall, especially after that 10-year bond auction today, I think the bonds are going to prevail regardless of what happens. And what I mean by that is pretty simple, is that the bonds right now are still trading below the S&P 500. So the bonds are right here, the 10-year IEF, and that is where the S&P 500 is. If tomorrow is bad, I was saying this today, if the bonds just stay the same or go a little bit lower, or if they drop big and want the market to go down, but in a weird way, the bonds are saying that the SPY could come back down to like 383-ish, around that level. So I think the bonds could hold, market comes down. Otherwise, if it's a really good event, I think the bonds and the market keeps going higher. I think the bonds are going to go with it. Lower inflation would mean lower rate hikes. Lower rate hikes would mean lower rates. That's why IEF, the bond yield should come down. IEF, TLT, they should all go up with it. So this is why I'm liking it. There could be a little bit of delay given the beginning of the year and kind of the gap that we've been seeing. But overall, I said this on most of the data, especially in this macro environment, I really think bonds are going to be the ultimate winner. So watch out for them. That is play number one. Then play number two, not really related to anything here, but I definitely want to see if it gets gas, especially if we get a positive move. But Disney, they announced that they're going to be having a new chairman of the board today, and it's getting right back up to that earnings gap level. And then when they announced Bob Iger is coming back, but speaking of Bob Iger, he had a very positive effect. It kind of faded with the market and all of the data, but they have lately been getting rid of a lot of people who have brought the stock down. So it's a switch up in the chairman of the board. This could be very, very big, and they're even making like calls of actions to bring out like shareholder value. So I think it could end up being good. I got some old shares. I'm going to be writing that, but definitely going to be keeping my eyes out for that tomorrow. And then finally, I keep bringing this one up, but I love it for tomorrow, the bank stocks. JP Morgan, Wells Fargo, Citi, they are going to be reporting on Friday, but I think this could be a good play right after the CPI because simply there'll be a lot of momentum. It's going to move all of the stocks, but now you could play market momentum with the cherry on top for earnings, and that might be one of the more easier plays to make. And then depending on what bond yields do, that could also factor into the situation. So keep that in mind. Those are the main plays as far as everything else. Now, I didn't make too many plays. I just sold out of Sava. Got like $130. We talked about that one yesterday. And then Oric, Anix, and Kasia. These are other shares. Remember, we did some tax losses selling at the end of the year. Well, I had some random gains on some of these shares. And I said, okay, let's take some of those profits, clear it up. I got like $100 or $200 from each of them. So got to realize a decent amount. And then I made an option trade, my first option trade of the year, man. I don't know how I feel about this. Man. It's crazy. But what I did is after we got this little move right here, I don't know if you can see it, but this is when Fed Susan Collins, she had an article in the New York Times, and she said she favored a quarter basis point. The market like ripped up, froze, got very weird, dumped like a point in a minute, and then began to resume. So I said, hey, let me go and set something up for tomorrow. Let's try some of the options. And I grabbed 5 of the January 23rd expiring tomorrow, 406 calls for 45 cents. They ended up going up over 50% there by the end of the day. And then as I waited through the day, it was like 322. I think it was like right around here, like literally right at that top. I decided to go with 20 of the UVXY next week, $7 calls for 14 cents. Again, that was like what, $280. So 200 this way, 280 on the downside there. And remember, like we were talking about, the VIX has that selectivity, and depending on what happens, what I mean by that is we want to play the wicks and not really where it's going to end up. But thought I'd throw $500 both ways, and let's see what happens. And again, just given what is expected tomorrow, maybe this one pays out, and we will see what happens. But that was pretty much it. Didn't do anything else. All I'm doing beyond that is holding what we had from yesterday. This old ES, remember, I was down like 11,000, down 2,000 now, but then I switched it out for NQ, so pretty much down 11,000. But now this is my downside for tomorrow. This is my upside. If it rockets up, I'm expecting to make money on this and lose money on this, and then the bond should come home and bring us home there. And then the MNQs still kind of getting clapped. That one's kind of doing its own thing, but I think it'll balance out with any of the shares. Still short on the Meta, still holding those Nvidias, which we got some gains on. And then again, a lot of things, Uber, Disney, those are about to come back to life, and then still got the Tesla and all of that. But like I've been saying here, we have a lot of up and down, and even I'm losing on some, making money on some, but even when it happens like this, we're somehow walking away with more money. And again, we are still building up what we got here on the balance. So that's kind of what I'm looking for. I think it's going to be good, but either way, after I get the data, I will start to reposition, hopefully take profits and go from there. But I like what I'm holding, and no matter what now, earnings in Powell, that'll be a delayed parachute, but this will be hopefully a lot of the meat on the bone. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, the best version of yourself is the most disciplined one. Win or loss, we are all in the same boat. What could happen today could change tomorrow. What could change tomorrow could come back. The point is, you need to have the stamina. Don't let the ego get the best of you. Let the budget take you home and set up for the rest of the year, but make sure you stay alive. And Chad, you are prepared. You learned a lot from last year. You got to bring it in here, and don't let the emotions get the best of you, because the opportunities are here, and I know you're ready, baby. So Chad, I will see you bright and early. You better get some good sleep. You better relax. No, it's okay. Relax. It's okay. Okay, you got to calm down. It's fine. Don't worry. Just don't be so excited. Just calm down. It's going to be good. We're going to be there in the morning. It's going to be fun, Chad, and let's go. This is what we work for. This is what we study for, and it's going to give us some runway and just a more Fati, bro. Let's see where it takes us. What's going to happen is going to happen. There might be some BS. It might work out great, but either way, you're going to be in the game. So let's get it, baby. I love you. I will see you in the morning, and Hearn.